Welcome back to Factful Finance, where we cut through the noise and give you the facts you need to take control of your financial future. Now let me hit you with a surprising fact. 1 in 5 Americans believe their credit score is the key factor when it comes to qualifying for loans or credit cards. But here's the kicker. There are things you're not being told about credit scores that can change the way you approach your finances. Let's dive into the credit score and uncover 5 things you might not know. First things first, your credit score isn't the only factor lenders consider. While your score is important, lenders take a much broader look at your financial health. They look at things like income, debt-to-income ratio, and even your savings. It's not just about how high your score is, it's about how well you manage all aspects of your finances. Second, your credit score isn't as simple as it seems. Many people believe that a score of 700 is the golden number to get the best rates. But did you know that different types of loans have different scoring thresholds? For example, you may need a higher score for a mortgage, but a 650 score could still be sufficient for an auto loan. Third, checking your own credit score doesn't hurt it. There's a common myth that checking your score will negatively impact it, but that's only the case with a hard inquiry. Like when a lender checks your score to approve a loan. Checking your score on your own? That's a soft inquiry, and it won't affect your credit at all. Fourth, negative items on your credit report don't last forever. A late payment might haunt you for a few years, but once it hits the 7-year mark, it falls off your report. Over time, even significant negative marks like bankruptcies or foreclosures lose their impact as your credit report ages and as you build a stronger history. Finally, there's no quick fix for bad credit. While some companies promise to boost your score overnight, those quick fixes often involve risky strategies or are outright scams. Building a good credit history takes time, and there's no substitute for responsible credit use, like paying bills on time, keeping debt levels manageable, and regularly reviewing your credit report for errors. Here's the bottom line. Your credit score is an important tool, but it's not the only thing that matters. It's just one piece of the larger financial puzzle. By understanding these myths and taking a more comprehensive approach to managing your finances, you'll be in a better position to make informed decisions about loans, credit, and your overall financial health. A quick reminder, this is for educational purposes only, so be sure to consult a financial professional for advice tailored to your specific situation. Now, what's your biggest takeaway from the credit score myth? Let me know in the comments below. If you found this video useful, why not hit that subscribe button and click the bell so you don't miss out on more valuable insights that can help you unlock your financial potential. We think you'll also find the video shown on screen next really helpful in your journey to mastering your finances. Thanks for watching, and I'll see you in the next video.